What's up, you guys? It has been a while. Last week was token 2049 in Dubai, so I was well and truly caught up with that. But the market didn't really do anything too exciting, so nothing different from my last analysis. But now we're heading into a very important event. We're going to be talking today about what's going on in the markets right now, because honestly, not much is really moving, but there's good reason for that. And it all comes down to what is happening tomorrow. It's FOMC day. This is one of those moments where even if price action is slow today, the next 24 hours could change everything. We've got the Federal Reserve's interest rate decision coming up, and traders across all markets, stock, crypto, even Forex, are basically in a holding pattern. Everyone's waiting to hear what Powell has to say. Now, the general expectation is that rates are going to stay the same. We're currently sitting in that 4.25% to 4.5% range, and the consensus is that they're going to pause again this time around. So on paper, it sounds like a non-event. But here's the thing, it's not really about the rate, it's about the tone. What Powell says in the press conference will give us a glimpse into how the Fed is feeling about inflation, employment, and whether they're gearing up for cuts later this year, or if we're looking at higher for longer. And that tone could bring the volatility back. Markets are hypersensitive to language right now. Just a slight lean towards easing or tightening, and we'll likely see a move in equities, crypto, and the dollar. So in today's video, I want to talk you through what I think are the key signals to watch from the Fed tomorrow. Then we're going to break down some of the major indices, S&P, Nasdaq, and the DXY, so we can understand how the traditional markets are reacting ahead of this. I'm also going to talk to you about Bitcoin dominance, which just hit a new high, and why that could be a warning sign for altcoins. And of course, we'll zoom in on Bitcoin price action, especially the 4-hour chart, which is where I'm seeing the clearest levels using our trading system right now. And there's actually some opportunity here even in the calm before the storm. So if you're new here, welcome. If you are returning, welcome back. I'm Annie and this is Trade Travel Chill. Be sure to hit that like button nice and early and hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. Now, let's take a start with the S&P. Since my last update on the S&P, we did actually move up into my original area of interest. So originally I actually had this candle right here marked as my area of interest, and price did return into that zone. Now what's important is to see the reaction here, because we did cross back above the daily 50 EMA. We tried to get above the 200 EMA, but we haven't broken above it with any real conviction. And we need to see now if we start to range here and hold between these EMAs as a level of support, or if we reject, that's not really going to be a good sign. But it all depends on the timing. So if we reject and start to head down prior to the FOMC, and then we get FOMC and we get good news, that could be the move that just causes a higher low, and then we have continuation to the upside. So we need price action combined with timing before we can really draw a conclusion on anything. But at this point in time, this movement right here is yet another lower high. That could signal further downside. So what's going to be key with the S&P is to see how we react on the FOMC and then after, because if that causes a sharp move down, it doesn't matter as long as the move down creates a higher low, and that's what we're going to be looking for. If we do get a sharp move down, that is probably also going to affect crypto. So if you feel like you are bullish on crypto, but you missed long entries, that may be your second chance entry. But if we're going to see continued upside in the S&P, we really need to see it get well and truly above these EMAs now and create a higher high, then come back to test these EMAs as support. We don't have any of that yet, and that means we need to remain cautious. When we have a look at the Nasdaq, it's basically the same story. My original area of interest was also this green vector here, which we did come up above, and so that has now moved up to the next vector, and we have the same thing. We've broken above 50 EMA, we struggled at the 200, it may consolidate around here, that's best case scenario, but at this point in time, it has also created a lower high. So So I won't bore you with the details because they're exactly the same as what I just told you with the S&P. And we are looking for literally the exact same thing. Now with the DXY, as you know, I like to look at the DXY on a weekly time frame because of this multi-decade channel that we have going on. All the way back to 2008, the DXY has been in this channel and it looks like it's just coming back down to test the support of that channel. So there's really not a lot to report on the DXY. It doesn't look like there are any strong bounces coming. It does look like it's trending down. Actually, it looks like it's in a free fall down if I'm honest. When we have a look at it on a smaller time frame, we can see that what happened last week was we broke down below this support here at basically 100 even, and we have retested that. So we have now flipped that previous support into resistance. That's a bearish sign. So we'll change our mind on that. If the DXY can get back above and retest, then that is a hint to us that we're going to start to see a trend change. But for as long as it's under that level, we are expecting the trend continuation and waiting to see what happens at the bottom of the channel. Now, a quick break here to shout out our channel sponsor for today, the Bitunix exchange. I talk a lot about trading on this channel, and one thing I love about Bitunix is that it's non-KYC, so you can use it from pretty much anywhere in the world. Bitunix offers both spot and futures trading, and they've recently introduced an earn program as well, which means you can now stake your crypto to earn interest on it passively. And if you're watching this video, I have hooked you up. You can use the link in the description down below to get a lifetime 20% trading fee rebate on all of your trades. That's not just a one-time welcome bonus, it's for life. So if you're looking for an exchange to trade on, check out Bitunix and make sure you use the link below to get the biggest savings on your trading fees. Now let's move on to Bitcoin dominance, because this is the one that I really want to highlight to you, because dominance is currently creating a higher high. So since the last time I saw you guys on YouTube, the Bitcoin dominance was trending up here, back to fill the entirety of this wick here, which is what we expected. And we needed to wait to see what happened once it filled in that whole wick. It's done that now, and it's actually broken above it. So when I zoom out on the Bitcoin dominance on the weekly time frame, it does look to me like it should make its way back up to around the 70% region. This whole area here is my area of interest. So it's around 67.5 to 71%. And the reason why I'm very interested in that area next is because when we zoom out and have a look at the Bitcoin dominance over time, anytime it's gotten around this 7% is where it's had a strong rejection. Previously here in the downtrend, it broke below it, it came back to retest it, and then it broke down further. This was in the bull market of 2017. Then throughout the bear market and just before COVID, it made its way back up to the 70% region. COVID happened and we started heading down again. We did retest it here in January 2021, and this was just before the bull market peak of that cycle, and then it dropped off from there. So 70% is a pretty important level for Bitcoin dominance, and it looks like it wants to get back there now. Now, of course, this cycle, it really is very different. I know people don't like to say that, but it really is, because now we have ETFs, we have institutional money that is a lot more money coming into Bitcoin than what we've had in prior cycles when it's only really been retail. So could it break through the 70% and keep going and end up being an only Bitcoin bull market? Yeah, that's highly likely, which is why I de-risked a lot when Bitcoin hit this level up here. I did a tweet at that time to let you guys know that I have actually de-risked quite a bit. And that is mostly because of the Bitcoin dominance and the fact that it continues to rise, which is not all that great news for your altcoins. But like I've said on all my videos, you can't use this chart alone to decide. So let's have a look at a few other things. We're going to have a look at the stablecoin dominance first. Now, what we don't want to see happen with the stablecoin dominance is that these EMAs right here act as support. We don't want that. We actually want to see stablecoin dominance continue down, because as long as we see the stablecoin dominance continuing down, it means that people are happy to put their money into Bitcoin and potentially also altcoins. If this starts to rise above and eventually break through this area of interest, that's a signal to you that people are risk off, and yeah, that's not going to be great for our continued bull market. So definitely keep an eye on this. We want to see this drop down below the EMAs next. We do have to be very, very open to this continuing up, because this right here is a W formation that is currently retesting EMAs. So absolutely critical to keep your eyes on the stablecoin dominance at this point in time. Now, this stablecoin dominance chart that I use is a combination of USDT dominance as well as USDC. So if you're wanting to follow this chart, you just need to add them both. And on that note, moving on to the totals. So this chart that I'm using for totals is actually the total 2, because total 2 does not include Bitcoin. And then from the total 2, I minus USDT, USDC, DAI, and BUSD, because I don't want the market cap of stable coins when I'm using this for the purpose of understanding where the money is flowing in relation to altcoins. So that is a special ticker. You have to type it in that way in order to be able to get the same chart for yourself. So using this chart, we can see here that price came into the area of interest. The 200 EMA is acting as a pretty good support at this point in time, but the 50 EMA is also acting as a resistance at this point in time. So this is actually right in between the two EMAs. It will probably consolidate here. That's what tends to happen. And then as the EMAs come closer together, a decision will be made where it will either reject both of them and head down, not going to be good for your altcoins, or it will break above both of them, retest them, and then head into higher levels. That is best case scenario for your altcoins. So this being a weekly chart, it's going to take some time. If we go down and have a look at it on the daily time frame, we can see that attempt happening now where it's come into the zone, it's pushed up, it's tried to hold the 50 EMA as support, but it's failed at this point in time and it's heading down. So again, I wouldn't panic yet because it could be heading down to create a higher low. So we just need to wait out for that. If it does create a higher low, that's going to be good news. Again, what you would look for next, if it does do that, is to get back above the EMAs and then hold them as support. That's when you would get more confidence in your altcoins. And that now brings me to the Bitcoin price action itself. So if you happen to catch my last video, and if you didn't actually, by the way, it's still worth watching because it was a high time frame analysis. So even though it was nearly 2 weeks ago now, it's still very, very relevant. So I'm not going to go into full detail, but I'll give you a quick recap. At the time, price was starting to head up. We were waiting to see what happened just under 100K. That was the region to decide if we're going to get further upside and the bull market continues, or we're actually in a bear market and it's over and we should sell everything. So now what we can see is that last week we came up here to almost 98K. That's almost exactly the region that I told you to watch out for. Just under the 100K and high 90s was the areas that I told you to watch out for. And the reason for that was because of this red vector right here. And so what you can see here is that price came right into that red vector. It rejected at the halfway mark, which is exactly what we do with vectors. We watch the bottom, the middle, and the top of them. And it's pulling back from there now. Now it hasn't changed structure, so I wouldn't say panic or anything. What I do like about it so far is that the rejection is a slow bleed down. So it doesn't give me a lot to worry about. It doesn't mean liquidation hunt. Like if we were going to have a strong rejection from there, I'd be a little bit more worried. This seems like just a natural pullback that is likely to happen after levels complete. We also have a ton of liquidity up still in the same region that I mentioned to you, the high 90s to let's say around 102K. But speaking of the levels, that area is going to be more relevant on the 4-hour time frame. And that's why this time frame currently has my highest level of interest. And that is good because on a 4-hour time frame, it means that you're trading a swing trade, which means that you get to get a good entry and you can hold on to it for a lot longer, as opposed to day trading where you kind of really have to be actively trading daily and monitoring your trades and learning when to take profit daily. Still, I always say day trading is the best way to learn to trade because you get to learn quickly because you get a lot more trading opportunities. But sometimes when day trades start to turn into higher time frame swing trades, that's when you get to relax. So when we have a look at the 4-hour chart and the levels that we trade over here, what we can see is that we have this W formation that formed when Bitcoin came down to around 74, 75K. That was the place to take an entry. If you're watching this channel, you should have the entry. Following that, we expect it to break the 50 EMA. It did that. Run up to the 200. It did that. And then it either pulls back or consolidates. So this whole area here is that consolidation. This counts as level 1 rise, and then then we have our consolidation that happens after. From there, if you're simply following the model with absolutely no emotions involved and you simply follow the rules, you would expect that another level is coming because we expect things to happen in threes. So once you can identify level 1 and the consolidation, you should be bullish, expecting a level 2 breakout. Does that happen 100% of the time? No. In the times it won't happen, it will be because most likely there is a news event that affected it and changed the model. And when that happens, you just sit out and wait a bit longer. So what did happen in this case, however, is that we did get our level 2 rise through here. And ever since then, we have been back in yet another consolidation. Now, let's talk about this price action right here, because prior to this happening, there was quite a bit of liquidity sitting above here. And price was ranging for a couple of days. And then we had this breakout. And then since then, we've been retracing. Does that count as a level, or what is that? To me, this was the false move that creates the weekend trap, because this move up happened on a Friday, and that's all part of the model. The market maker will send the price in a direction to induce more traders into taking positions, because they close on Fridays at 5 p.m. New York time. And once they're closed, they're done, but they need to keep retail into trapped positions so that when the market reopens Sunday 5 p.m. New York, there is liquidity on the table for them to take. And when they take that, that is known as false move week beginning, which happens on Sunday, Monday. So when I look at this price action, whilst it didn't really go anywhere, there was at the time, which I can't show you now because time has passed, but at the time there was a ton of liquidity up here, and it made sense for them to come up, spike into it. The liquidity came from short positions, so those shorts got ruined. They took it, and then they went into the weekend where there just wasn't a lot of buying going on, and so we started this very, very slow. You can see it's no candles, no volume, nothing amazing, typical of what we see on a weekend. Now, the tricky thing that we have here right now is that we have FOMC. So that, like I said to you earlier, if the model doesn't play out, it doesn't play out because of a news event. So we cannot guarantee that we're going to get a level 3 rise out of this simply because of the FOMC that is happening. And that's why this is a really good spot, A, to de-risk, like I told you in my tweet, and also to hedge a short position in case we don't get a level 3 rise. And this is the best we're going to get. They took the liquidity that they wanted, and we're actually going to reverse from here. So right now I am hedged. I'm in a long position from the W. I'm in a short position from the high over here. And hopefully that will be enough to allow me to ride through both of those trades until the end of the FOMC, find out what happens, and at that point I can manually close one and keep the other one going once I know the direction. Hedging is quite an advanced strategy if you're not a seasoned trader. So if you're wanting to learn how to do things like that, if you're wanting to learn this trading method in full, know what to do before news events, know how to play them, know what to do after news events, and how to stay in good trades and keep yourself protected, consider joining us over at Trade Travel Chill. We have memberships that include access to everything that we offer. So we have quite a few courses that you can do inside of our membership system, and they will take you through from absolute beginner to the more advanced trading strategy that I cover on this channel. And we have 2 types of memberships that include all of that. So you get the courses, you get access to our daily market updates, and you get access to our custom indicators that you see me use on this channel. Now, we have 2 memberships. The first one is more like a self-learning membership. So if you don't like to be in Discord chats, if you don't like to be distracted by other people's opinions, but you still just want the learning material and you want to be guided by my pro team's professional updates, then this will be the membership for you. But it is 100% self-learning. So if you have questions or something confuses you, there isn't really anyone to reach out to. It's 100% self-paced. If you think you might need that guidance and you might want to be able to ask questions to the team and also jump on our live sessions where you can see them trade live in the moment, then you need to be in a first class membership. So that includes access to everything that I mentioned earlier, but also access to my team. So if you're interested in either of those, the link to our website is in the description of the video. Check it out. There's a lot more information on this website than what I've just showed you. So take your time to go through it and decide if it's for you. So back to Bitcoin. Here's my opinion on a potential for a level 3 rise. As long as this bleed is slow, which is what it is, I feel like this is just a retracement between levels and I'm not really too worried about it. As I said, I'm hedged in a short position in case I'm wrong. And that is simply because of the news event that we have coming up. But for me personally, as long as the price holds above this area around here of the 200 EMA, I would still think that we're going to get our level 3 rise. And that's because that 200 EMA also lines up with this vector here. And you can see it's around the halfway mark of it. So this is really the key area through here. And it might even be that if you're not in a long position and we're lucky enough to get price come down there, that could be a good area to open a long position, but it's going to really be dependent on the candlestick confirmation at the time. You wouldn't just blindly buy there. You'll need to wait and make sure that we have some signs of buyers stepping in. But that to me is the next best area. If I wasn't in a long position, that's where I would be looking to take one. Now, if we were lucky enough to get our entry there, it might end up being that it's a post FOMC. I mean, perfect case scenario would be that we just continue to do this until FOMC. It causes us some volatility with a little stop hunt to the downside, and then it shoots straight back up into our level 3 rise. That would be perfect case scenario. However, I'm not predicting that because you really can't predict what's going to happen at news events. We really do just need to wait and see. But if we did get something along those lines, then I would expect that we're going to come for this upper liquidity next between the, say, 98 to the 102 area. And then because that will end up being the 4-hour level 3 rise, that's where we need to really reassess to see if we're continuing from there, or does that level create the daily time frame lower high that is our highest level to get out because we're not going to new all-time highs. So too early to say that yet, but I will definitely keep you guided along the way post FOMC if I see any signs that say, hey, we're done. So if you're not already subscribed, make sure you do that so you can stay updated. When we have a look at the liquidity that we have currently, you can see here that there is a big cluster below price. So if we kept trending down, we would take out the liquidity from people who went long in this range here on very high leverage. And we also have just this one little level here that is quite close to the 200 EMA. So that just adds reason to why I think this is the greatest area to get a long position should we get the final candlestick confirmations, should we actually enter that zone. Now, if we do take that, we can then see that there is liquidity to the upside, and it would be likely that that's what they're going to come for next. Just note that doing anything before the FOMC, because it can be so volatile, something like this could happen where FOMC comes, it takes the lower liquidity in a very fast, sharp stop hunt, and then it takes the upper liquidity in a very fast, sharp stop hunt, and then it just goes back in and trends. So unless you're an expert at trading news events, it's probably not the best idea to try and get an entry before it. Let this shenanigans happen and then look for reasons to enter once it's over. So whilst the dominances are showing me that it's not a great time for alts just yet, I am still keeping my eye on altcoin price action, and I'm looking for higher time frame plays really. One of the coins that I'm looking at currently is Cardano. And the reason that I'm looking at that is because I can see it's been in a downtrend for a really long time. And this support here, we've spiked into a number of times and tried to bounce out of it. So that is telling me that this level here at around 0.55 is the level that wants to hold as support on Cardano right now. But I also have to be cautious because out of that support, every time we have created a lower high. Now, because we have so many of them, that could be leading to a potential change in trend. And that's why I'm watching this price action right now to see if I can get myself a really good position before that change in trend happens. And I'll show you why it's got my interest. After this spike right here, we moved out. That's when we created yet another touch to the trend line. It tried to get above the 50 EMA. It's tried to hold it and it's failed, and it's starting to head back down. Now, this move here has created a number of vector candles along the way. So all of those act as areas of interest for a retracement. So all I need to do now is see how price reacts at those vectors. And if I get any kind of bullish confirmation at any of them, and that bullish confirmation creates a higher low, that's going to be a good area for me to get an aggressive entry on anticipation of a trend line breakout next. What I'm actually watching watching right now is this green vector right here. And you can see that the current candle is sitting right on the halfway mark of it. Now, I've shown you in this video so many examples where the halfway mark of a vector candle is so significant. So definitely pay attention to those. Now, if you're not part of TTC and you don't have access to our custom indicators, we have created a free version for you. So just go up to your indicators and you just type in this here, PV SRA candles auto override, and look for the one by 𝗟𝗶𝗿𝗃𝗲. And if you add that to your chart, it's going to add this down here. Let me just move myself so you can see. So then from there, you go into the settings right here and you tick this here to set the candle colors on your chart. And that's going to give you the same candle color or similar candle colors to what you see me use on this channel. So that's going to allow you to mark the same vector candles. So I'm looking at this as a high time frame play. I'm on the daily time frame and price is in the zone now, but also I'm using that in combination with fibs, where I've just drawn my fibs from the bottom of this spike to the top of this spike, and I'm looking at fib levels as well for a potential entry. And the reason for that is because not only do I have this green vector, but I also have this blue vector right here as well. And the halfway mark of that blue vector is somewhere around the 61.8. So for me, I'm looking at all these fib levels, the 38, the 50, and the 61. And the way that you could play that, if you're confident and you do think it's going to break out, then what you can do is either stagger your orders. So you stagger one at 38, one at 50, and one at 61.8 with your stop loss under this wick right here. And if the price continues down, it will hopefully pick up all three orders, create the higher low, and then move out to the upside. That's one option if you're confident. If you're not confident, you simply just set alerts at every fib level, and when they fire, you come back and you wait for your final candlestick confirmation and you just take your one entry there. Now, if we happen to get that, I would expect hopefully for a breakout following that, and I would expect for us to come for this liquidity up here first. So looking up to about 81 cents, and then we'd have to reassess. If the market was ridiculously bullish, we've got such a wide range right here for it to return to, and that would become my next target, providing we do get through this entire zone of liquidity.